Hey, thank you. And thank you everyone for joining us with us today. We have an exciting agenda for all of us. We want to talk about what are the major trends that we are seeing in the banking, capital markets, payments, wealth management, insurance space. We want to talk about what are the transformation themes that we are seeing and the resulting operating model changes that enterprises are working towards. There is no webinar these days that doesn't have a strong theme on AI, so we definitely want to talk about, but in the context of accelerating this transformation. And then we want to do a deep dive on what are we seeing with suppliers in the market, how are the major IT business process and engineering IT service providers doing in the financial services landscape, what are their key investments, value propositions, and also their performance is what we want to dive into. So we're really excited. All of you are here with the conversation today, and I am very excited to talk to my fellow panelists, amazing all-star rockstar analyst team that we have today with us. So if we get started, right, I wanted to put some context to our discussion, right, because there are a few things that we are observing at scale, and it is very important for us to kind of bring that out and amplify it. And if you look at this slide, there are 5 key things which we wanted to make sure we start with. The first one is around cost takeout and cost mandates being very, very aggressive. And I think this is going to continue to play out. And I know Vijitesh is going to talk a lot about this in detail. The second thing we want to all of you to understand is every dollar being spent is being scrutinized. So the value realization or articulation is becoming important for not just the existing investment, for every new investment dollars that are coming in. And we are seeing these pockets of what I would call as frustration or areas where this value realization business cases have failed, right? Be it large data initiatives, cloud initiatives. We had one client which has spent almost $800 million on a multi-year cloud initiative and only reached half of where they had to. So you realize that a lot of money has gone in, but you've not achieved your goals. And I think that is where the debate is coming around. How do we think about our operating model? How do we think about our sourcing strategy? So the insourcing, which is the in-house versus the outsourcing debate, is starting to prop up. I know Abhilasha is going to talk about what is the role of captives, what is the role of in-house teams, and how do they balance that with outsourcing today. And then we want to talk about how does this operating model needs to be changed to be able to kind of drive this value realization, but also this aggressive cost takeout mandate. We have our own framework of thinking around that we want to share with all of you. And last but not the least, we do want to talk about AI, specifically generative AI, because there's a lot of conversation around what can be done with generative AI, what is possible versus the art of the possible. So we want to talk about that specifically around business transformation and the productivity enablement pieces. So let's dive into this conversation today. And Vijitesh, I thought let's talk about cost as a key parameter and what are you seeing in the market here?
Yeah, sure. Thanks, Ronald. And the way the context has been set up, we are seeing really that if you look at the headline statement from most financial services organizations, it's really how do I optimize my total cost of operations and not just look at it in a siloed fashion across technology, talent, IT services, ops, but look at it in a continuum from my technology and my sourcing decision and what are the considerations, the impact of it to how do I kind of organize the talent, the services model, and to the operations piece of it, the process operations, the people around it. And I think one good example to kind of talk about this is how do you look at this from an insurance context, where we are seeing that there are a lot of challenges from a SaaS crawl perspective. If you have a system that is not modern enough to be able to meet the demands that we have of the current macroeconomic environment, we are seeing that there is a lot of need to address the challenges that they are facing with certain point solutions, and that creates a SaaS crawl. So there's an interesting dichotomy where you have tech debt that is also amassing from all of the legacy systems that are there, but you also have a sprawl of the solutions that you are kind of putting in your systems. and the decision that you kind of take to manage your technology has a very long term impact on the way you kind of manage technology and operations around it. And that really is what we are seeing clients to really question and think about, that as we do these decisions now from henceforth, we really need to look at it as a long term decision, because this has implications on in various ways, right? And the impact of this on the TCO is really, really high. And the way that this manifests is, we have a very great example, around the retirement industry also, on where we are seeing the fact that the way this is getting manifest is, and we did this study, this which is kind of stays relevant today, where if you look at the total cost of your operations across your applications, to your infrastructure, to your operations, process operations, and people around it, you can reduce this by as much as almost half of what you would have if you look at it in a more in more long term fashion. And you don't have to really think about it just from your infrastructure or apps or ops in a kind of silo. You need to really look at it in a more holistic fashion. I know Vilasha is going to talk about some of these levers that enterprises are taking, but if you look at it really, the most important levers are, A, how do you do your technology decisions, and how do you source for these technology systems and the management of this? What role does sourcing for enterprises play in this journey? How do you kind of drive a lot of efficiency in your processes and your operations around it? How do you kind of move your services in a more cost effective model? And how do you kind of take a decision around it to target, in terms of from a future perspective, the decision around your and at the same time, I think a lot of the newer, with AI and Gen AI being the talk of the town since last year, we're also seeing a lot of optimization questions being raised around, hey, all of the spend that we are making on new age systems, how do I kind of optimize it and ensure that I'm getting the right value out of it through, FinOps, through some of the AI ops pieces. And since the last year, we also saw a lot of rationalization, which we call as digital rationalization across the systems, right? So that is really the bedrock of all that is about to come in further in this discussion.
And which is, one thing that I do take away from your summary out here is that it's a total cost of ownership conversation as you are driving this business transformation. So it is not just about cost, but how do I do this in a self-funded manner? How do I do budgeting for the spend out here in a different manner? So as every dollar gets scrutinized, how do I use the power of data, technology, and the global sourcing ecosystem to make better decisions? And I think within that sourcing ecosystem, then the conversation happens is what should be done in-house, what should be done outsourced, and how do you balance that mix? And Abhilasha, do you want to talk a little bit about that?
Sure, Ronak. Thanks. So just building on this observation that Ronak, you and Vijitesh made, which is reducing the total cost of ownership. That's the key driver that enterprises are looking at. And that's exactly what is fueling the insourcing versus outsourcing debate more. So for just taking one step back and building a bit of context, in BFSI industry as a whole has seen tougher times in last couple of years, with challenges like the recessionary sentiment, reduced consumer spending, high inflation, all building up, which are leading to budget cuts and deferrals. So the key theme that is building out is the enterprises, they are moving more towards the insourcing kind of a model there, where they would want to have more control on their technology, on their operations, and generate more cost savings. So this do more with less mantra is also sort of fueled by the rising dissatisfaction that we have seen of these enterprises from their service providers, basically on the back of, let's say, slow decision making or lack of innovation. So my top 2 or 3 observations that we have seen in the current insourcing trends would be, first of all, areas such as contact center and the typical back office operations, which have been outsourced for quite some time, they have sort of become a little saturated. The more activity where we have seen a greater leverage of insourcing in recent times would be areas like research and development, engineering services, security ops, digital banking, these kind of areas. And again, insourcing is also utilized as one of the levers to bridge the talent gap that we have seen as a major concern, especially in these emerging or less mature areas. The second big observation would be there has been a debate that large banks, they have become a little saturated in terms of the delivery centers that they own or their insourcing appetite. But in recent times, we have seen that situation also changing, where we have seen even bigger enterprises like State Street, they have started consolidating their operations. The case in point, the current JV with HCL Tech. Even big banks like Lloyd's, they have been opening newer delivery centers in India. On insurance side, we have a lot of examples like Sun Life, Swiss Re, etc., also opening new delivery centers in or new captives in um, upcoming geographies. And the third big observation around insourcing would be more around these newer players, the likes of Revolut, etc., also getting on this bandwagon of opening up captives or relying more on onshoring. So these would be the three major trends. And to get a good view, a good pictorial view of where this pendulum is exactly moving. So in the last couple of years, we have established that it is more inclined towards insourcing. Having said that, the GBS or the captive model continues to coexist with the service provider or outsourcing model. There have been opportunities of things like captive carve-outs where the enterprises, they are planning to shed off assets. And we have seen a lot of these captive carve-out deals, especially they get accelerated in macroeconomic downturns that we saw historically during the 2008 financial crisis. So in these macro conditions, these are also the few opportunities that we have seen coming service providers' way. Now, I would like to hand it over to Kriti to discuss more about the velocity of changes that we have seen, which basically impact these sourcing decisions, and talk more about it.
Sure. Thank you, Vilasha. And I think we did cover our, discussion around how the entire total cost of ownership is becoming a major, area of concern or focus for BFSI enterprises. Let me also talk about, some of the other major issues, or rather one of the, major concerns of BFSI enterprises in today's times. And, we are doing this work with a lot of financial services firms in order to understand what actually defines mature digital for them, right? So as they envision this state of being that mature digital enterprise, we ask them that what is your biggest issue? The biggest issue that they mention is that we need to drive or increase the velocity of change as an organization, right? And as they think about this velocity of change, one of the things that they realized is that there is a lot of friction between my tech and operations. And within my operations also, we see a lot of, friction. Hence, what they want to do is they want to increase this intimacy between their tech and ops, so that, at the end, we have better alignment between the two. And at the same time, we are able to drive solid outcomes, leveraging this intimacy. The only way to do this, in our opinion, is thinking about how can we increase our digital density. And if you think about it, this is something we have been doing for the last 8, 10, 12 years. We are doing the same thing, right? We want to reduce our operations footprint, or if I were to put it in a better manner, we want to use more tech to drive our operations and build more digital workflows and processes. And then we need an operating model to run this, right? Because apart from this velocity of change conversation, another thing that we keep on hearing is that we are not getting the right ROI or value from our existing digital investments, right? We have spent millions and billions of dollars in our data modernization, cloud initiatives, and yet we are not able to, build that value articulation case out of these investments, right? And at the same time, the messages that they are getting from their existing suppliers, vendors, is that you need to invest more to get that ROI, right? Which is really not making a lot of sense. So in net, what we are looking at is we are looking at tighter alignment between our tech and ops, have higher digital density, and at the same time, as an organization, we need to drive the right value, right? And this value realization definitely, takes us to an interesting spin around how will my operating model change as I think about this, higher value realization from my investments. The questions we are hearing a lot is that I don't have an operating model that integrates all of my, digital investments to drive this velocity of change, or, helps me realize this value. And this is where we believe there lies a great opportunity out here for enterprises to, think about this change. And at the same time, it's an opportunity for providers, service providers, tech providers to help craft and drive this change, right? And at Everest Group, we have kind of also defined a framework in terms of, how do we look at a product operating model or product-led IT model or platforms defined operating model, right? There are multiple ways to call it out. We are already seeing a lot of, banks talking this language. So JPMC, ING, and a lot more such inquiries from our enterprise clients around this pivot towards a platform defined operating model is what we are seeing. And BFSI firms are really now focusing on, an integrated business, technology, and operations operating model. At the same time, they are thinking about integrating data and intelligence into their operations, right? So this shift towards a programmatic approach actually involves leveraging platforms, which is, how do we define the platform-based operating model to embed, data and intelligence into the business operations very seamlessly. And this, entire strategy ensures not just efficiency gains, which is the focus area, right? So cost efficiency, but at the same time, you can think about increased, capabilities in terms of process self-optimization, intelligent decision support, and addressing some of the unique challenges and constant changes that this particular industry is thinking about, right? And finally, would also like to highlight that as we think about this pivot towards the product-led IT operating model, enterprises are also thinking about how do we now measure our success, right? So the typical KPIs or metrics, which were very backward looking, right? So something has gone wrong. How do I, look after that? How do I fix that? So that thinking has now changed, and we are seeing a lot of, emergence of this OKR philosophy, which is that, hey, we have these objectives and key results I want to drive towards, and how do I make that progress, right? And this goal is also shifting. So net, it's all about how we organize ourselves as an organization, bringing in IT, business, technology, products, all coming together to deliver on these, key objectives we are going after. And we are definitely sure that in the next 5 years, this will be a major conversation lever across the board, across the industry. And, as we look at this pivot to a product-led IT operating model, the sourcing executives and the category teams also, need to reorient their thinking. And I'll hand it over to Vijitesh to talk about some of this shift on these aspects as well. But this is, the framework and the operating model shift that we are seeing in the industry.
Yeah, thank you so much, Kruti. So I think, as you know, as Kruti mentioned very well, what are we seeing is that is something as a as a shift from an enterprise mindset. What does it mean for the teams that are kind of working with all of the third party suppliers and outside ecosystem and vendors who are kind of working with enterprises and to help this entire ecosystem to drive change, right? So there are two challenges that are associated with this broadly, right? A, as I do my sourcing and as I do my decisioning around which partners do I need to work with from a services, from a technology, from an operations perspective, how do I kind of work with them to articulate the value that really drives outcomes for me across business and IT? So how do I work very closely with them? And two, as I define these outcomes and the pieces that really define how my journey will look like in the future, how do I govern those and how do I manage and measure those on a changing basis? As Priti mentioned, we are now looking at not like a backward set of metrics, which are KPIs and SLAs, which are very static view on some of these outcomes, but more of a moving target state model when we say, clients need to, or enterprises need to look at objectives and key results, wherein they need to keep this as a shifting goalpost. Once they achieve a certain outcome, they need to move on to the next in the grander scheme of things. That's where sourcing and category management teams need to really think about how do they work with business and IT to design the sourcing ecosystem, the way they do management with their the way they do management with their providers, their partners and suppliers. And we worked last year with several enterprises, right, ranging from financial services firms to large insurance enterprises, where they've kind of driven that alignment between their business teams and their sourcing and vendor management and IT teams to be able to create that change internally within the organization, so that they also do the sourcing and the way they do contract management and vendor management in a more forward looking, in a more business aligned manner. What we are seeing is that the ability for the sourcing and category management teams to be able to drive this change requires time, requires effort. And that's where, the other implication is for a lot of the suppliers and the partners who are kind of working with these teams kind of need to help, the sourcing and category management teams to align and orient towards this and drive this change, right? Of course, part of this is going to come from internally, from a financial services firms, internal teams. And part of it is also driven through the suppliers, wherein when we have conversations with suppliers, they are kind of changing their playbooks and ensuring that the outcomes that they're kind of talking about are not just IT outcomes or technology outcomes, but also business outcomes that then are mapped to some of the IT outcomes and some of the KPIs and SLAs, so that that creates like a very cohesive way in which this is mapped. One such examples that we wanted to kind of talk about is how do you kind of align some of these metrics in an insurance example. So we have, on the product development side and on the claims side, we kind of did this work with some of our clients where we evolved this thinking with them and told them that, hey, as you look at your value streams, which is, a set of processes or capabilities that are aligned and have a single stack around technology, IT, and operations, and you kind of drive outcomes around it, and you also do sourcing around it. How do you kind of ensure that the objectives, which are some of the larger target state, I would say, goal posts, and then what are some of the measurable metrics or key results that you kind of need to track as part of these value streams? How do you kind of create those? How do you kind of speak the language with your suppliers and partners, and how do you kind of then drive governance around it in a certain frequency that is applicable, or that works best for the supplier enterprise combination, right? So we've seen that this is a model that is currently evolving, and of course it is in a stage where both the suppliers and the enterprise are kind of working together to achieve a joint outcome. But definitely what we are seeing is that this is the direction in which enterprises want to go. The other important thing that we are seeing as we as we see the operating model or the value stream model to kind of manifest itself for different financial services enterprises is the fact that a lot of the partners who kind of drive these outcomes need to showcase that ownership and the ability to kind of ensure that the outcomes that they are kind of signing up for or governing for their clients, they're able to attribute the outcome to themselves, so that the way they deliver on these outcomes is something that the enterprises can sign up for from a risk perspective also, which is a separate conversation which we'll talk about later. But that is something that we are seeing as an evolution, when we look at the OKR's philosophy for a lot of the enterprises.
So again, Vijay,
I
just
think
to kind of bring this to kind of thought process, right? So as we are looking at the operating model shift, the one thing that we are saying is you are looking at the products and services as you are delivering as a bank, and how do you organize your entire operating model around that? Or as you mentioned in the claims in the insurance case, how am I organizing towards the value streams that through which I'm delivering the value, and how do I align the organization towards that? Or it's a combination of two. And that
Yeah.
is where how do we get the persistent teams that work with the clients to deliver those, be it internal or external, becomes very critical. So that's where it's the right talent with the right skills in the right location to be able to deliver that, and how do you design that? And that is where the role of sourcing becomes so critical, because what we are thinking about is how do they come in and kind of drive this change? So Abhilasha, do you want to talk a little bit about that?
Sure, Ronak. And I think it's one of the most pertinent questions that we have been getting from enterprises is, okay, we understand the operating model is undergoing this evolution or shift towards, let's say, platform-led operating model. But what does it mean for us? How does it translate to our sourcing decision? So far we have established what the trend looks like, what are the drivers from a 20,000 feet kind of a view. But now in terms of the ground reality, there are top 3 or 4 considerations that these category managers they should be aware of, because they sit right at the apex of the entire supply chain, and it's their decision that is going to impact how these operations or how these services they turn out to be. So those top 3 4 considerations would be, first of all, assessing how critical that category, which could be any process, any specific business process, or any specific IT service or platform, how critical that is to the entire operations or services. Based on that, having those interactions with the budget holders, with the business stakeholders, with the IT team and ops team, so that entire collaboration that is very critical for this shift to actually implement this shift on ground. The second most important consideration would be striking that right mix between the global and the local sourcing strategies. So there would be few categories or areas where a local strategy would work well, not a global strategy. For example, any category which is driven by, let's say, language related requirements, that would require more of a local kind of a sourcing approach. The third most important consideration would be leveraging more of these digital tool or accelerators to make more informed decision, more real-time decisions, and then disseminating that information through the entire set or spectrum of stakeholders which are involved in that for more smoother and integrated operations. And the last bit would be more around reevaluating the supplier base, because moving to this tech plus ops kind of a service model will also need a reevaluation of the suppliers which a specific enterprises chooses to work with. So doing that when vendor consolidation kind of an exercise, the risk assessment, the portfolio or capability reassessment, all those things would be key considerations for the category managers. Now, having discussed these key considerations, if we look at how to actually implement it and address the when, why, what part of it, I think there are 2 very important parts to it, which would be, first of all, how frequently this should be done. So the frequency of these assessments should be annual or semi-annual basis the requirements of the company. But one important thing would be to have that open communication line across all the stakeholders, which would help in tracking the evolving changes the enterprise has for the requirement of a different operating model. And we have seen a lot of enterprises doing that. Case in point being enterprises like MetLife, New York Insurance. They have started looking at these models and understanding the intricacies of the changes that need to be implemented. And these changes, they don't happen overnight. These efforts, they need to be made from ground up. For example, one of the first stepping stone would be changes in taxonomy. And that is going to be a long drawn process. And then slowly these changes would move to bigger changes like reassessing the category spend or restructuring the supplier base, etc. So those would be the when, why, and what part of how to implement these changes from a category perspective. And if we also look at the implementation aspect of it, there would be 2 or 3 very critical aspects for the category managers to be aware of. The first important aspect would be the collaboration should not only be limited to the teams or the stakeholders, but also from the platforms or the systems which are the part of the entire supply chain or value chain. For example, they need to uncover or explore the opportunities that newer technologies like, let's say, AI, they have in the entire spectrum of the supply chain. For example, traditionally AI was used for demand forecasting based on historical data, but then how to improve that entire process to leverage generative AI on top of the synthetic data to get more real time or more accurate analytics around demand. Similarly, using generative AI for things like contract generation. So these new opportunities, they need to be explored and augmented with the current supply chain process. And the second bit would be the entire process reimagination. So taxonomies we discussed earlier, but along with that, there would be changes in the basic design principle. So the OKRs and the KPIs that Vijitesh was mentioning earlier, the enterprises, they also need to evolve on that front to entirely and successfully transition from a traditional tech only or ops only kind of a model to a more product led operating model. So these have been the observations that we have from an implementation standpoint. We briefly touched upon the AI or the digital aspect of it. Let's discuss the elephant in the room, the AI part of it, and I'll hand it over to Kriti to discuss more about how AI fits into this entire operating model picture.
Sure. Thanks, Abhilasha. And definitely we had to talk about Gen AI in today's session, as well, right? Because as Ronak mentioned in the start, this technology trend is definitely the, talk of the town. But I must say that things are becoming quite real now with the POC fatigue kicking in and BFSI enterprises really asking that big question around where it is worth investing my money from this technology standpoint. So, we definitely see a shift in overall strategy, investment roadmap, and thinking if we compare it to the last, 12 to 18 months, and we'll talk more about it. But net, we do see Gen AI being a great opportunity within the BFSI spectrum. And, the reason I say that there is an opportunity out here is because we see the expectations in financial services and insurance, to be the highest from this technology. So we have been running a multiple CXO surveys in terms of, what are their expectations, or, how are they looking at generative AI as a technology within their industry. And one thing that has really, become very, very clear, crystal clear for us is that BFS leaders at a CXO level have very high expectations from generative AI. And given there is this top-down pressure and, the board has already bought the idea, and we have been speaking with a lot of data strategy heads, people in AI COEs in some of these enterprises. And they definitely mentioned that Gen AI is now getting a lot of attention from the board. For example, we were speaking with this enterprise who really didn't have any responsible AI team, right? But the board has mandated to get that team up and running as fast as possible. At the same time, there was a 10 members AI COE team, which they plan to double in just 5 to 6 months kind of a time frame. So net, what I want to highlight here is that it's not just the surveys that are speaking up, but on reality, on ground, we definitely see this push coming from top down. And definitely, given this top down pressure, there is a strategy refresh across business, IT, procurement, tech, etc., which generative AI has brought in. So we have banks saying that we want to become a cognitive or an intelligent bank, right? While this was more of a digital bank kind of a messaging back then, which has now shifted. We also did an interesting analysis, right, to see how many times artificial intelligence or Gen AI is appearing in annual reports, investor communications, etc. And in the last 2 years, there has been, an accelerated rise here. So net, generative AI and AI overall is becoming an important, strategic pillar for BFSI enterprises, so that AI first thinking is definitely, starting to show up in their messaging as well. What expectations do they have from Gen AI in kind of in return of treating it as a core element, of their strategy, is what Abhilasha can, talk about more.
Sure, Kriti. So, as Kriti rightly mentioned, there has been a lot of buzz around it. There have been a frenzy of use cases that are out there that enterprises are exploring. But to declutter this Gen AI washing, enterprises and both service providers as well, they need to understand the underlying motivation that is driving this greater uptick in exploration of generative AI across use cases. So to understand that, we ran a CXO level survey, and to directly hear from the horse's mouth, these were the expectations that you see here up on the slide. These were the underlying expectations or motivations that was driving their decisions. What we have done is we have categorized these motivations in two categories. One is the motivations which impact the velocity of change, and the second would be which impact the quantum of change. So first discussing the expectations regarding velocity of change, I think first and foremost, to uh, to reduce the knowledge latency, that would be how the employees of a particular enterprise, they can distill the insights out of the plethora of information that's available to them. So a lot of use cases, they are coming up in this space in form of knowledge bots. So that is one. And the other one would be the improving the accessibility or reducing the learning curve. So to draw a parallel, what low code, no code did to modernization, generative AI is doing on that front. So there are a lot of internal tools available for enterprises, but the employees, they don't know how to use them. So generative AI, what it is doing is removing that inertia or lowering that domain specific requirement that is for that particular job. So these two motivations were highlighted on top by the CXOs, and both these motivations, they sort of help enterprises in easing the talent gap. That's also one of the big concerns that the enterprises have had. The other one would be more around the product development life cycle. So keeping in mind the one of the important application of generative AI, that would be content or code generation. That is again one of the great applications or motivation that was highlighted by enterprises. Now, moving to the motivations which bring a greater quantum of change would be things like better service delivery. So we see a lot of these banks, they have already put use cases in production when it comes to customer interactions or agent assist. There were earlier, there were conversational AI or chatbot kind of tools that most of the banks, they were using. Now they got a makeover, and now they are powered by generative AI to get more personalized outcomes. Other motivations that we have seen would be generating revenue. For example, big banks, they already have use cases like financial advisors powered by ChatGPT already in place. Case in point, Morgan Stanley. Uh, then there would be other use cases, for example, reimagining the entire business operations. That is again one of the motivation that we have seen. And this motivation is sacrosanct amongst the type of banks that were surveyed. Now, I would also want to understand from you, Ronak, since you have had these interactions with banks more often, what have you seen from the actual deployment or the actual motivation of deployment of these generative AI use cases?
Yeah. No, thanks, Abhilash. And I think this pilot to production question is so prominent, right? And I would say there are two major themes that I'm picking up. One is I want to focus on these specific micro use cases where there is value which is very clearly defined and it is time boxed. So I'm able to kind of realize this and it helps to drive productivity and adds business value. If it doesn't, then we don't want to do that. And the second piece that we are seeing is I want to use AI as a technology or generative AI as a technology that is more embedded in the technology that I'm consuming. So if I'm having a Salesforce or a Pega or a ServiceNow already in my environment, can I use the generative AI capabilities out of the box? I think those two the embedded nature of AI, and then focusing on these micro use cases are two themes that are kind of standing out in all our conversations. And these small micro use cases, Abhilasha, to your earlier point around changing the business operations or reimagining business operations, it is like a series of these micro use cases being stitched together to that end-to-end transformation that will happen, but it has to happen in smaller chunks and in a high velocity manner. And I think velocity is something that we are also seeing a very common undercurrent when it comes to AI as a piece. And Kriti, I know you did a fantastic study speaking to almost 30 plus banks and asking them their AI maturity and where they are on the journey. So wanted to hear from you, right? What have been the key takeaways from that study?
Oh, definitely. And I believe, a separate session on generative AI is definitely required, given, this is such a huge topic, but we'll try to cover the key takeaways, using this summary slides in terms of what has been our experience in speaking with these leading BFSI enterprises on their generative AI roadmap. So first one is definitely it is a change accelerator. I believe we have seen enough examples that how generative AI is bringing a strategy refresh or changing in the positioning statements and messaging that these enterprises are taking out there in the market. So I think that is one fact that has been established. But at the same time, as Abhilasha and Ronak mentioned, right, that now the POC fatigue is kicking in, right? We really need to focus on those micro utilities, which operations do we need to go after? And, we really need to prioritize this pivot from POCs to production, right? So this POC fatigue is kicking in. I think it's very important to enterprises to now look at that prioritization framework, because the investments are limited and we really need to look at the ROAI that we are expecting out of this. And it's a great opportunity for providers out there as well, in helping them understand and make that pivot from art of the possible to where, is the squeeze worth the juice. At the same time, there is, productivity expectations. So a lot of use cases are productivity efficiency led currently, right? And there are apprehensions given how the regulatory and risk, environment will shape up in terms of getting a lot of client facing use cases into production. But overall, anywhere close to 2 to 5% of productivity expectations at an organization level is what some of these economics offices and these BFS enterprises are aiming for. And if you really think about it, right, 2 to 5% and at an org level will have multifold effects on how the services and delivery productivity change happens, right? So for providers, I think it's good time to think about how do we plan to pass on some of these services productivity benefits to our enterprise clients, because they are definitely looking after for those expectations. At the same time, an interesting outcome of this study was that yes, generative AI is an opportunity, but I believe the bigger opportunity here is that how do we accelerate our strategy on some of the foundational elements which will help us drive scaled AI innovation, which is around data, cloud, security, right? Interestingly, close to 57-58% of the BFSI enterprises that we study currently lacked the right foundations of data, cloud, and AI to really accelerate on the generative AI journey. Hence, we believe that pure play generative AI is definitely an opportunity area, but at the same time, looking at the foundations and bringing in the change here is equally important, right? And as we do that, looking at what kind of regulations are shaping up in the market with the EU AI Act in the European region and a lot of similar, regulations expected in other geographies as well. So that is one area we really want to think about. How do we set up that governance and compliance office? And at the same time, how do we do it responsibly, right? So responsible AI as a theme is really picking up across the geographies. Getting the foundations right is one thing, but how do we use it responsibly and, continue on our journey as a bank, which has certain values, goals set for ourselves is becoming very important. And to do all of this, I think the people strategy is, the biggest focus area. So a lot of, hiring happening from a Gen AI standpoint. New niche roles are emerging, right? But at the same time, we do see a lot of, supply demand gap in the market as well, given, things are moving at such a fast pace, building that people, portfolio is becoming a challenge. So how can providers help fill some of this is becoming very, very important. And at the same time, yes, it is, the technology is bringing a strategy refresh, but there's a long way to go there. There are a lot of challenges that CXOs are thinking about. The biggest one being around, how do I articulate the value realization out of my investments, right? Think of this as the early cloud days wherein we really had to build that business case of change, right? So for generative AI also, I think it's very important to build that case of change. And at the same time, thinking about how do I do my procurement now? How will my KPIs, cost metrics will change? How do I think about, the legal regulatory issues around this? How do I think about the risk and other things? So there are a lot of, challenges as well, which are keeping the CXOs awake. But this is one opportunity that they really want to tap into, and that is why we did a deep study on generative AI across the BFSI segment, and Ronak will definitely talk about this study more. Yes,
So we do have an offer for all of you. So we will put a comment in the chat, which will be a web link for you to request complimentary access to our report. This is a detailed report in generative AI in financial services, which talks about what are the major use cases, what has been the adoption curve, what are the current drivers, what are the challenges, how are enterprises thinking about risk, compliance, responsible AI, and other elements of it. I know there are a few questions that are coming up around the risk aspect of generative AI. How are clients dealing with? How are they thinking about it? So I think a lot of that starts to get covered and have a conversation around it. So definitely this is something which I would advise all of you to take advantage of. Click on the link, get the access to the report, and our teams will share the report with you. So that will be a good one. What we wanted to wrap up with the last section today is to give you a bit on what are we seeing with the supply side, right? Because we had a great conversation today around the total cost of ownership being the key mandate of all financial services enterprises, but they want to do that in a way that they can drive change and change at speed. And as they do this velocity of change, the operating model was important, and we talked about operating model and the software defined platform operations, and definitely the role of AI, data, cloud, engineering as part of it. So this story as we view it, but it's also important to look at what are suppliers doing and where are they placed. So I wanted to start with numbers first because it makes it very easy to talk about numbers and then go into the details. If you look at the top 19 publicly listed IT business process services providers, and if you look at their BFSI revenue that they publish to the street, the Wall Street every quarter, and what we thought is let's remove all noise around acquisitions and currency and have what we would call as an organic constant currency picture of the market. And if you look at suppliers in this market, they had definitely a challenge during the COVID time period in 2020 due to a sharp decline. But then we did have a much stronger recovery in 2021 and 2022. And given the macroeconomic certainty, the bank failures, and the recessionary sentiments, we did see a bit of a massive pullback. What are we seeing out here is a fundamental shift in terms of how clients are thinking about one. There have been a significant amount of digital transformation activity that was accelerated in 2021, 2022, which led to this spike. Now the focus is around how do we drive value on those, how do we bring the operating model into consideration, and how do we create a leaner, more efficient, productive organization as we do that. So this is, as I think Abhilasha mentioned this earlier, right? How do we do this more from less is becoming critical. And as they're thinking about this, they're also looking at alternatives, right? How do we work with alternatives to kind of give us the scale that we need, the capabilities that we need to be able to work in this? So definitely there is a sense of challenge that we see from a supplier mandate perspective. So the thing to look at as we look at the supplier performance is it is in a way bottoming out. We do see recovery coming in. We are seeing larger BFSI, IT, and BPO outsourcing engagements. We are seeing those across the board. The RFI, RFP activity has increased. So there is positive signals in the market, which means there is recovery going to happen. And that's what we are looking forward to as we see the market expand out here. And if we just look at the different segments out here of suppliers, and we wanted to call that out because there is a market where we are seeing the specialist or the mid-sized engineering providers being preferred a lot more than some of the larger. We're starting to see that recovery curve for them much faster. What it also means is there is a value for that specialist Goldilocks positioning in the market, where some of the smaller suppliers are also seeing that value come out here, right? So that's what we wanted to definitely talk about. And if you look at the changes that are happening in the supplier ecosystem, I think the things we wanted to emphasize on, and we'll cover in the next few slides. One is, how are they thinking about their value proposition? What kind of investments are they making? And how are they bringing that platform operating model with their own assets and solutions? So we do want to talk about that, right? So Kriti, can you talk a little bit about, how are we seeing this shift happen?
Sure, definitely. And, before we get deeper into in terms of how are, the suppliers changing their value propositions and, evolving their offerings around this shift, definitely would like to, talk about the shift as well from a tech and operations transformation standpoint. So definitely, three big step changes in the industry is what we are observing. So if we look at the last 8 to 10 years, I think it was more around infrastructure transformation, or, making my processes, workflows more efficient, using cost optimization, automation techniques, looking at productivity as a, change lever, looking at things such as offshoring, labor arbitrage, automation from a technology standpoint to bring in all those efficiencies in my existing, processes, which gradually shifted to a stage wherein we are now thinking about, process re-engineering our processes altogether, infusing a lot of, intelligence into my workflows and operations, and truly building that intelligent and data-driven organization, right? And if we look at the next step change, which is Horizon 3, this is wherein a lot of business model innovation will come in, right? BFSI as industry is seeing a lot of product and channel innovation across different value chain elements, lines of businesses. So how will we evolve our operating models in order to tap into these new, channels of revenue? At the same time, things such as banking as a service, platforms, and other things are also shaping up in the market, which will also require that fundamental, change in my transformation roadmap thinking and model is, what we need to think about as we look at, the next horizon of change. And service providers, technology providers are definitely thinking about it. And, I will request Vijitesh to talk about how are they evolving their, proposition and offerings to tap into this particular change.
Yeah, sure. Thanks, Kriti. So, as we look at the supplier go-to-market, right, we are really seeing that there are four key observations, right, that kind of really stand out, right? So, one is a lot of the suppliers, and especially, for example, Ronak and Kriti talked about it. If you look at a lot of the ones who have a very challenger or very specialist positioning, as well as the ones who are very consulting driven heritage, right? They are really focusing on driving that education with their sales teams. And how do you kind of look at and align to client OKRs and key business objectives as you kind of help them in their journey towards their shift towards a future, operating model. They are ensuring that the playbooks and the language that they kind of speak to with clients is really very much in sync with, the future that they're trying to envisage for their clients, right? They are creating their offerings and playbooks in such a manner that those are more aligned to the new operating model. So how do you kind of create more multidisciplinary micro value proposition based playbooks which really focus on important client pain points across the different value streams or value chains that they are aligning their OKRs on, right? So how do you create a FinOps playbook for, a client in the wealth management segment, how do you kind of do this for a client who wants to move their, let's say, entire agent and field operations or intermediary segment, right, for the life insurance segment? So we are really seeing clients, this type of client thinking to start to showcase and reflect in supplier playbooks, and they're kind of trying to align their offerings and combining these assets across multidisciplinary areas of their playbooks to kind of align to client thinking. From a partner standpoint, I think they're kind of working with their partners to infuse and embed AI and their outcomes across their playbook. So that is becoming more of an embedded conversation, so that it becomes easier for clients to kind of adopt some of these solutions and not undergo a separate decision cycle for investing in a lot of these technologies. And then finally, I think value acceleration and realization. How do you kind of ensure that the business case for the offerings and the solutions and the assets that you create is more of a milestone based and a checkpoint based manner, so that your clients can now realize value in quick sprints or cycles and then move on to the next phase of the transformation journey, right? That's really what we are seeing evolve. And I think Abhilasha is gonna, kind of cover a little bit of some of these examples in terms of flavor that we are seeing, these providers kind of take forward with their financial services offerings. Yeah, Abhilasha.
Sure, thanks,
Over to you.
Vijitesh. And just to make the initiatives that Vijitesh just discussed more real and sort of correlating it with the underlying motivations that enterprise they have from these operating models, I think there are 3 or 4 major forces which are in play here. So the enterprises, first of all, the reason why they are inclining towards more software-led operating model is they want to reduce the total cost of operation, which is the mandate that we have been discussing throughout the discussion. So there's huge capex involved when the enterprises, they want to set these operations in place from the scratch. So to avoid that, to reduce that infrastructure expenditure, to reduce that operations expenditure, tech platform expenditure, the providers, they are pivoting to sort of as a service kind of a mode or out of box kind of a delivery. A lot of providers like, let's say, TCS Banks, Infosys Finacle, they are doing that. And these mid-market or new age players, they are the early adopters of these kind of solutions. The second big force that is there in play would be having that scalability as a factor, where the enterprises, they can scale their operations as per the requirement. That is again one of the underlying reasons that we have seen greater adoption of this kind of a tech plus ops operating model. The third big force would be more around the tighter integration. So if the service providers, they have that platform layer infused along with the services, they have more control, tighter integration, and more stickiness to their offerings. So that is again one of the key motivation. And one very sacrosanct reason would be that this kind of a model actually solves the fundamental problem that legacy systems they have had. So a constant updation is not required when this kind of an operating model is there in place. And the last bit would be, not all providers have similar offerings or strong suits. So this kind of an operating model lets service providers join forces in their strong suits to offer best of breed kind of a solution. So a technology player coming together with an operation heavy player to give more versatile offerings, best of breed kind of solutions. So those have been our observations, how service providers, they are actually bringing these solutions to life. Another observation that we have started seeing is, on top of these software-led delivery models, we are seeing greater infusion of technologies like AI, where providers, they are promising greater efficiency gains by infusing or augmenting their current solutions with AI. So I would like Ronak to discuss more around the specific IT and business ops use cases and how providers, they are infusing AI in their current business.
Sure. And Abhilasha, I think you kind of nailed it, right? Because when we're talking about different operations. There is a lot of AI use cases, and again, the CTA or the complementary report that we are sharing actually talks a lot about these different use cases around how do you infuse AI across IT operations, from application support to infrastructure support to core banking operations to platform operations to everything around business operations. So we've seen those areas out here. So I know we are over time, but again, thank you everyone, for kind of, staying with us throughout this conversation. You will have access to the on-demand content where you will see, different reports and different, themes that are upcoming. And there are a few questions that are in the chat. We'll definitely take those, offline, and we'll respond to you. But thank you everyone for spending time with us.